Have you ever gotten your paycheck, looked at the numbers, and just wondered, hey, where did a chunk of my money go before it even got to me? Well, today we're going to get to the bottom of that. We're talking about something called tax deducted at source, or as you've probably heard, TDS. It's a question basically everyone with a job asks at some point. It feels a little weird, doesn't it? Like, why does the government get first dibs on the money you worked for? Is that even fair? Well, it turns out there's actually a pretty smart system behind the whole thing. Okay, let's dive right in. The entire idea is built on a concept called pay as you earn, and it's designed to solve a huge problem, not just for the government, but believe it or not, for you too.
Right, so this legal-sounding quote actually gets to the heart of a very simple problem. Think about it. A country has bills to pay all year long. We're talking roads, hospitals, defense, the whole shebang. Imagine if the government had to wait for millions of people to pay their taxes in one giant lump sum at the end of the year. It would be a total cash flow nightmare. This system makes sure the government has a steady stream of money coming in to keep the country running day to day.
So to make this whole pay-as-you-earn thing work, the government doesn't just have one trick up its sleeve. It's got a whole toolkit for collecting taxes. There are three main tools in this kit. You've got TDS, which is our big focus today because, honestly, it's the one that affects most of us. Then there's TCS, or tax collected at source. And finally, something called advanced tax. We're going to touch on all three just so you know the difference.
All right, let's get into the big one, TDS. This is that automatic deduction that you see, and it happens on way more than just your salary.
So here's the absolute key to understanding this. TDS makes the person paying the money responsible for the tax. So instead of you getting your full salary and then having to worry about putting money aside for taxes, the company paying you is legally required to cut out the tax portion first and send it straight to the government. It's a tax payment, but it's made for you, on your behalf. Theory is one thing, but let's make this real. TDS pops up in a lot of places, some you might not even expect. So let's look at 4 really common examples that probably cover what most of you experience. First up, salary. This is the classic. Your employer takes a look at what you're likely to earn for the whole year, figures out your tax bracket, and then calculates an average tax rate. They deduct a piece of that from your paycheck every single month. The goal is that by the time the year ends, most, if not all, of your tax bill is already paid off. Okay, next up, interest from things like fixed deposits. If the interest you earn from a single bank crosses 40,000 rupees in a financial year, the bank has to snip off 10% as TDS before they credit the rest to you. It just goes to show this system isn't only about what you earn from a job. Now let's talk about rent, because this is where it builds a little. There are a couple of scenarios. If a company rents a property from you and pays more than 2.4 lakhs a year, they have to deduct 10% TDS. But the law also covers regular people who pay really high rent. If your rent is over 50,000 rupees a month, you are actually responsible for deducting 2% as TDS before paying your landlord. And for a super modern example, let's look at online gaming. If you win money on a gaming site, the company has to deduct a flat 30% TDS on your net winnings. That's your wins minus your losses. This happens either when you go to withdraw the money or at the end of the year. It's a perfect example of how tax laws are always adapting to new ways people earn money. Okay, so that's a pretty good tour of TDS. Now, really quick, let's just clear up what those other 2 tools in the government's kit are, just so you don't get them mixed up. So let's just get this straight. TDS is tax on your income, and it's deducted by the person paying you. TCS, tax collected at source, is totally different. It's a tax that a seller collects from you when you buy certain things. The classic example is buying a luxury car. The dealer will collect an extra bit of tax from you on top of the car's price. So just remember, TDS is on income you get, TCS is on stuff you buy. And what about that last one, advanced tax? Well, you can think of this as the do-it-yourself version of TDS. It's for people whose income doesn't get hit with automatic deductions, like freelancers, consultants, or business owners. They can't rely on an employer to handle their tax, so the law says, hey, you got to estimate your own income and pay your taxes in quarterly chunks all through the year. So we've covered the what, the how, the who, but let's bring this all back home. Why should you, the taxpayer, actually care about any of this? I mean, what's really in it for you? Okay, so what's the real takeaway for your wallet? Well, first, it prevents the absolute shock of getting a massive tax bill in March that you have to pay all at once. By paying a little bit at a time, it makes being tax compliant so much easier. It's almost automatic. And here's the most important part to remember. Every single rupee of TDS deducted is your money. It's a credit in your name, an early payment towards the total tax you owe. It is not an extra tax.
Honestly, here's the best way to think about it. TDS is basically like a subscription model for living in the country. Instead of one giant, painful annual bill, you make small, regular, manageable payments. And those payments are what keep all the services we rely on, from our roads to our hospitals, running smoothly for everybody.
So what do you do with all this information? Well, you've got to be proactive. Your PAN card is the magic key that links all these deductions back to you. So your action item is to go online and look for something called Form 26AS. Think of it as your personal tax passbook. It shows every single tax deduction made in your name. You need to check it and make sure that every rupee deducted by your employer or your bank has actually been deposited correctly with the government. It's your money, so it's your job to track it.
And that is TDS in a nutshell. It's a system that might seem complicated, but it's really built for convenience, both for the government and for you. Once you get the logic, it all starts to make sense. So with that, we'll leave you with a question. What's the one tax topic that still feels like a total mystery to you? Let us know, and maybe we'll break it down in our next explainer. Thanks for tuning in.